Heading over to the economy, what's happening next? Well, we got our GDP numbers out. GDP was up 1.7%, down from 1.9 the period previous. So that's not good on the economic productivity front of the country. And we've just had recent unemployment print here, and unemployment is going up. It ticked up about 0.2 to 0.3% from 6.9 to 7.1 across Canada. And I think it was about 5.9 to 6.2 in BC. So we have unemployment ticking up in BC as well as across the country. So this is shaping up. We're starting to see a little bit of weakening in the economy, which could be positive indicators for the Bank of Canada to decide to make a different interest rate decision this month that we're going to talk about next. But CPI has also been trending down, so inflation hasn't really been a big fear for the Bank of Canada. However, our core inflation, the one that they really watch, has been sticky and staying right around, that 3% level and not really easing off. And I think that they're really saving any further interest rate decreases when we have more economic data that supports an interest rate decrease. They only have a couple more bullets left in that gun, and they only want to use it when they really need to use it. And so far, we've been bumping along, but we are starting to see some downward pressure with respect to the news out there, and we could potentially see a rate decrease here this fall. Now, speaking of which, the Bank of Canada is meeting on September 17th. They are going to have this increased unemployment and decreasing GDP. So there is a chance that we could see a decrease here in September, but perhaps because even retail sales are still really strong and we still have that little bit of stickiness with our core inflation, they might wait to see a couple of more reports to see how the economy is performing before they decide to decrease interest rates further. And we do have a couple more meetings left this year. So whether it's this meeting or the next one, if things aren't looking good, then we might see another interest rate decrease later this year, which, on the other hand, it could be the factor that helps stimulate even that much more activity, which could then start to close that window of opportunity for anyone that's been sitting on the sidelines, wanting to get into the market, or has been actively out there. Another interest rate decrease could be the precipice of a little bit more activity, which could then turn up the heat a little bit on the market. Not a ton, but just enough that we start to chew through some of that inventory, and that window of negotiating some super smoking deals starts to close. So if you've been on the sideline or if you're out there shopping, make sure you start to take it seriously and take advantage of this opportunity. And heck, negotiate a great deal. Protect yourself from the downside, but at least you can get into the market in a time where the market is still favoring the buyers. Now, as those of you know, when the Bank of Canada does decrease the interest rate, it actually impacts the variable interest rate. But many mortgage holders and purchasers of new mortgages or homeowners are looking for a fixed rate. And the Bank of Canada bond yield had increased here in July, but it's now starting to come off again down to 2.7. That's lower than it was back in August. So we might actually see some decreases in the fixed rate mortgage market. But I think that the big banks are going to take some time here because it's been a real yo-yo, and we'll need to see how things play out with future economic prints like more job market and economic data to really figure out where the bond market is going to head. Now, in other news, one big developer that we follow is Westbank, the creator of Vancouver House, Shangri-La, Butterfly, and other prominent real estate in the city of Vancouver. And they were partnered up on the Sanoc project, which is just on the west side of the Burrard Street Bridge. They've recently sold out their position in phase 1 and phase 2 of this project. One of the, I think is the Ontario Union Fund, has stepped in and purchased their position, and therefore increasing their position in this legacy project that is going to just transform the skyline on the west side of Vancouver. I think one of the things that they discuss is that this is really securing the capital to move this project forward. And it's a bit of a sign of the times for developers like Westbank, who have been selling a lot of their assets, probably raising capital just to deal with the challenging market that we're experiencing today in the developer space. I also heard of another property that went into foreclosure. It was a commercial property. It was supposed to be sold to a medical company, and they backed out of this deal at the last minute. And it's a medical building over by St. Paul's. So there's definitely carnage in the development space. But meanwhile, the resale market is bumping along, and hopefully you're taking advantage of it.